All right, welcome everyone to AI Mutual, your insurance company for life. We are your lifetime agents. We're really excited to introduce you to our website. So everyone get your laptops ready, fired up, pull up a URL browser, and let's get this stuff started. All right, so what we're gonna do is type in your URL browser, www.aimutual.com. And again, it's www.aimutual.com. It will forward you to this particular page here, okay? And I love this because it's, hey, I'm Nicole. I'll get you a life insurance quote in seconds. Are you ready to go? And of course, you're like, yeah. So what you're gonna do first on this home screen here is your first name and last name. But before we do that, just really quickly, just want to show you the contact information that's located up here, has all of our business contact information. And then also here, in case you just want to change up the look of the screen, you can do that. Whatever's best for your eyes. And then here is my phone number. If you're having any technical issues at all, or if you're having questions, and a lot of people like to use this particular site themselves, just so that way they can just play around with the numbers and see how much a policy would cost for a particular coverage amount. And if you're ready to buy, you can definitely call me and then I can walk you through this, okay? Or I can do it for you. I'm happy to do that as well. All right, so let's go ahead and get started, all right? So what we're gonna do is put in a very cool first name and last name because all of my clients are cool people, right? So we're gonna say the first name is, we're gonna say Power, okay? So we're gonna say we have a male client. His name is Power, and we're gonna say the last name is for life, right? Because life insurance gives us power for life. It empowers our family, make sure their future is bright. In case we are no longer here, we know that everything has been left in great hands. So let's go ahead and give Mr. Power for Life a quote. Press next. Great. Nice to meet you, Power. What's your gender? Well, we have two to decide from, so he's either male or female. So we're going to select male. And then it says, how healthy are you? So I actually love this because it makes it very simple for you. So we're going to start with the top one, okay? So very, very healthy. These are usually my young people who don't have any health complications. They go to the gym, they work out, they also take their annual physicals every year at the hospitals, and they're doing great. So as you can see, 10% of applicants qualify for excellent, okay? So let's know most of us are not top tier there, but for our very extremely healthy people, this one's for you, okay? The next one, which 20% of applicants qualify, is great or better. And this insurance rating is called preferred. Now, this one is kind of where a lot of us are in the category, is 40% of applicants qualify for good or better. And this would be the rating standard plus. And here is where the majority of us fall, right? 75% of applicants qualify for average or better. And this insurance rating is standard. And then lastly is poor insurance rating standard. I like the fact that they really didn't put a percentage there because really a lot of people, again, fall into this category here. So what we're going to do is select the hard that we feel applies to us, right? Because of course they're going to have to run health check and everything else for us, or check our medical records. But you know what? Mr. Power feels he is very healthy. Okay, so we're going to go ahead and select this. Next, nicotine or cannabis. Now, as you know, marijuana is now legal in many states now. So they had to actually add this question a few years ago, actually a couple of years ago, to everyone's application. So now they are interested. Insurance carriers are interested if you have ever smoked nicotine or taken cannabis use. And cannabis is marijuana. So we're going to say for Mr. Power, it's never, okay? But let me go back and show you what happens. And here's a previous, but in case you make a mistake, you can click that. Let's show you in case you have, okay? So if you select previously, they want to know which type, how often, when did you quit, okay? So let's just say, he did, and here's the selection. You could choose from cannabis, chew, cigarettes, cigars, e-cigarettes, and pipes. And e-cigarettes is very new too, because, they had that whole scandal that came out like last year. So again, a lot of updates have been happening in the insurance industry. So what we're going to do is select cigarettes, okay? And we'll come back and change it to never. But I just want you to see what would happen if you needed to select that. Then they say, how often did you smoke? Daily, weekly, monthly, 1 to 2 times a year? So not even that frequent. But we'll just say, hey, he smoked monthly, okay? And then when did you quit? Mr. Power here stated that he quit on the first of the year. He was like, I have a New Year's resolution and I no longer want to smoke, okay? So this is how that would look if you select, yes, I have used nicotine previously. What about if you're currently using this particular items? Well, again, you have to select which one you're using. We'll select cannabis now. And then how often are you using it? Well, oh man, you know what? My nerves are so bad at work. I'm doing it every week, okay? So then you would select that, okay? But what we're gonna do in this instance is go back to never for Mr. Power, okay? How tall and how much do you weigh? So we're gonna say, and here you go, here you can just scroll down, all right? And we're gonna say our particular insured here or candidate here is 6'2", okay? Our applicant is going to be 6'2". And then we're going to say he weighs 220 pounds. All right. But again, you can put whatever you need. If you don't know Mr. Power's weight, we could just select here and we could just skip that, right? But we do know his weight, so we want to make sure we include that. All right, let's go to next. We're almost done, okay? So last question, Mr. Power. For life, what's your date of birth? So in this instance, we're going to say that Mr. Power is going to be an April Fool's baby. All right, let's just keep that simple. And then we're going to say he is in his 40s. Okay, so we'll do 1978. Okay, perfect. All right, so this is where it comes to the selection. So, of course, if you would like to know more about all of your options, please contact us so we can have a one-on-one consultation. We actually provide you with an in-depth knowledge of all these various insurance products, so that way you can make the right choice for you and your family. Okay, so as you can see here, there are several items that he can choose from. He can choose from accidental death. He can choose from term insurance, return of premium insurance, and lifetime insurance. Okay, so here what we're going to do is we can select, we'll do 300,000. Okay, and then as you can see down here, it starts to populate the premium. Premium means the amount of money that you're going to pay on a monthly basis, or we can change this to annual. You can see those figures as well. But right now it's highlighted for monthly. You can see how much you would pay based on the term that you select, because we selected the term option, right? So when we look down here, he's like, you know what? The 30-year, which was traditionally standard, and as you can see now, at first they went to 35. Man, now they're even going to 40-year terms. So this is totally new within the last year. Traditionally, term products only went to 30 years. Now we're at 35, 40 years, which is great for the insured, because they get a longer amount of time to be able to pay the exact same premium per month. So that's great. Nothing changes. And so what does that mean? It means that if Mr. Power selected the 30-year term, he would be paying $50 every month for 30 years. Okay, so that's great. He's locking in his rate. Now, before we go to this page, let's go back, all right? I just want you to see everything that we have at the top. And we'll get back to these options in a minute, but let's change or calculate the death benefit. And I selected 300,000, but what if Mr. Power really doesn't know how much coverage he should be getting, okay? So we just kind of, as you can see, we just had a put in examples here. However, these can always be changed to suit your lifestyle, okay? So mortgage balance, let's just say he actually owes $210,000 left on his mortgage, okay? He just bought a new house, hasn't been in it for that many years. Other debt, okay? And this includes everything from credit cards to cars. What else are you paying? Well, he actually has some student loans. He has a car. So we're just going to say he owes $88,000. He has $88,000 of debt, okay? Number of children under the age of 18. Why do they stress the importance under the age of 18? Well, they're assuming, hey, that they may want to go to college. You know, also too, you know, if you have a spouse or you have someone else who's going to be their legal guardian in the event you are no longer here, those kids are still their responsibility legally until the age of 18. So we want to make sure that we leave enough money to be able to raise them properly, okay? Until they turn 18, then technically they're grown, they're on their own. But we're just gonna say he has 2 children, okay? And then they wanna know the children's age. So we're gonna say he has one that's 10 years old, and then he has one that's a little bit older, that's 16, all right? And then a beneficiary benefit. This is the annual amount for your beneficiaries per year. Now, this is pretty cool. This is stating how much would you like for your beneficiaries to receive. And we'll go into the different types of beneficiaries that you can select from. But maybe you want to leave these funds to your spouse. Maybe you want to leave some funds to your mom or to your parents. But you'll say, hey, you know what? Every year, I think I want to leave them $10,000. We're just going to put that, okay? And then the benefit duration, how long do you want to give your designated beneficiaries $10,000? Well, you know, I think 10 years sounds great, you know, and this will help them out. And, you know, hopefully after 10 years, they'll be on their feet, or, you know, my kids would have graduated, so they don't really need that much money after 10 years. So that's great. So then coverage amount of life insurance currently covered. How much do you currently have? And when we say this right here, we're talking about your private life insurance, not your corporate life insurance. Because as you know, if you work for corporate America, you can receive life insurance through them, okay? And the reason we don't include those numbers here is because anything can change with that. You could either retire, or you could quit, or you could be fired. Anything can happen to where it leaves you with $0, okay? Because a lot of those particular policies are not convertible. Some are, but a lot of them are not convertible. So we're just gonna say that Mr. Power currently does not own a private life insurance policy. So we're gonna put $0, okay? And then savings balance. How much does he have in his savings? So we're just gonna say he has $30,000, all right? Right? Again, make sure these numbers fit your situation. And then one thing too, we will have a call on as well, just to more of a dreaming of your future, right? Planning for how you wish for your heirs' future to look like. This beneficiary amount right here, man, even though we just put $10,000 in this field that quickly, you have to really put a lot of thought behind this, right? How do you foresee the environment or the future that you want your, you know, descendants living in? You know, how do you want them to live? Is there a certain neighborhood? You know, is there, what type of colleges do you want them to go to? Do you want them to own businesses? I mean, you have to start planning that out, because this figure can really change on that. And their future is dependent on what you put in these categories, okay? So let's go ahead and select next. All right. So they're saying, oh my gosh, she needs 10 million. Okay, well, we're not going to do that. Okay. But let's just go back to our $300,000. All right. But as you can see, you can go up to $10 million. All right. On this particular website to get quotes from. So I love playing with the numbers just to kind of see what I want. Okay. And then let's go back to see what other options for insurance are available. So of course, that was for term. But you also can do accidental death. So if you wanted to do accidental death for $300,000, we'll go down a little bit here. Okay, so that way you can see what's available. So if you wanted to do accidental death, and what is accidental death coverage? Okay, well, this is going to pay out to your beneficiaries in the event you are involved in an accident. So it cannot be anything health related. It can't be cancer. It can't be anything health related. But for instance, if you were driving and you were in a car wreck, then this would pay out to your beneficiaries. Okay, so that's what that is. And so usually these particular quotes are a lot cheaper than you will see with whole life insurance or term insurance, because most people, believe it or not, even though we see wrecks happen every day, most people do not die by accidents. Most people pass away due to health reasons. So that lets us know that our health is our wealth, that we have to start taking care of ourselves, okay? But as you can see here, let's look at what's included on this page. The insured for $200,000. This is the insurance carrier, Mutual of Omaha. Monthly is $28.01. What is their rating? It says AM Best rating. And AM Best, you can always go online, just type in ambest.com. And what you'll see here is that they actually rate insurance carriers. Okay, they take everything into consideration, from their solid reputation, how long they've been in business, do they pay their claims, do they pay their claims on time. They look at various different ratios, so they take a lot into consideration, right? Their customer service, the entire experience. And so this is a great carrier here because they are rated A+. All right, and one thing I want to reassure everyone who's looking, whether you're a client or a customer thinking about becoming a client, AI Mutual only works with A and higher rated companies. We do not work with anyone less than an A rating. Okay, and why is that? Because this goes to the solidity, I guess just to say, of the company. You want to make sure that they're not going to become insolvent. Okay, so if anyone's rated less than an A, oh, there's some questions there, right? Maybe they don't have enough assets to cover all of the claims. Maybe their customer service is terrible. If they are not rated an A or higher, you need to be alarmed. Sometimes you will see a lot of carriers with cheaper rates. Oh yeah, you can pay $10 a month for $1 million worth of coverage. Have you researched them on AM Best? You need to see if their reputation precedes them. Okay. So this is a good one here. Expiration age. This goes to 80. Okay, so let's get into age 80. Exam, no exam is required. Another great reason why people like to do accidental insurance. An average time to get this enforced means to get your policy active, is 15 days. So again, it just kind of give you a summary down here. No exam required. Paper policy delivered. In some cases, you'll see that there's e-policies for email, okay? But not every carrier is up with the 21st century. They're still working on that, okay? The insurance industry is a little bit behind most industries when it comes to technology, all right? So some of our carriers are still issuing paper policies. And then it says here, the insurance covers death as a direct result of an accident or trauma. Okay, so you can click there for more information about the product. And again, this is guaranteed. You cannot be turned down for your health. Okay, so if you have some health issues, they don't even look at your health because this wouldn't even pay for health anyway. And again, you can be covered instantly after e-signing as short as 5 minutes. How awesome. So you can be covered same day. All right. And again, here's our contact information if you have any questions. And so let's go ahead and change and look at some other products here. So we've already looked at accidental death. We've already looked at term. What is return of premium? This is such a great option. A lot of people do not know about it or even offer it. But what return of premium is, we already talked about term policy, where you pay a certain amount of money for a certain length of time that you agree on. So if you select 30 years and you're paying $50 a month, that's what you do, right? One cool thing, though, about return of premium is if you know you're going to live, you have a lot of longevity that runs in your family, and you're like, you know what, after 30 years, I really want my premiums back. Because with term policy, you pay for 30 years. And if you live past 30 years, you don't get anything back, right? And some people are like, no, I actually want my premiums back. I want all my money back. So with return of premium, they say 100% back, but I've looked at the math on that, and it's usually anywhere between about 91% to 96% that you may receive back on your premiums, which is still fantastic. But after, let's just say 30 years, and you say, you know what, actually, I'm good, or, you know, I want my funds back, they will give that to you. Let's just say you only went 15 years. You only paid for 15 years in your policy. And you're like, you know, I don't need this policy anymore. I already have another policy. I'm going to go ahead and cancel this. Well, guess what? Your return of premium policy will actually pay you out for those 15 years. And of course, I always provide illustrations for my clients. We review everything in detail before they sign off, so you will know exactly how much you could get back, you know, in year 10, year 15, year 20, or year 30 if you, you know, go the entire length of your term. Okay, so let's do a return of premium. Now, because of this advantage, of course, it's going to be a little bit more money, right, than just a regular term policy, because it's a benefit, an extra benefit to you, but it may be worth your while. So let's just go and do, and here you have options of 20-year and 30-year. Now, one thing I wanted to say really quickly as well, your duration is dependent upon your age, okay? So sometimes, you know, if you're in your 20s, you may have access to longer terms. So for instance, with the term policy, this particular gentleman, Mr. Power, was able to go up to 40 years. But if Mr. Power was already in his 60s, then it probably would not go up to 40 years, right? So just letting you know that as well. And then of course, we have different states here that we are licensed in. We're just gonna say he's from the state of Texas, and then we'll do the duration as of 30 years. So let's check that out. We're gonna rerun the quote since we have new figures here. So we have an excellent carrier here, a surety. And for this particular benefit for $200,000 return of premium now, it is going to be $88.74. They are a minus carrier, still great. He will have this active until age 73. How cool is that? That at age 73, he will be getting his money back, his premiums back. That's great. He may need that at that time. And that's what I like for people to look at too. When you, the good thing about this product is you can receive money back. So if in 20 years or 30 years, we don't know what the world's going to look like then, it may be a terrible economy where you really do need those funds. So I love this because it always gives you an option. You don't have to use the option. If you don't have to cancel your product early and get those funds in 15 years. But if push comes to shove and you needed that, man, how awesome is it to know that you have, you know, thousands of dollars with this insurance company that's available for you, okay? And then they put possibly for an exam. And you'll start to see that a lot in the insurance industry now, just as of COVID from last year. A lot of carriers that were just like, no exam, they want to keep that door open just in case. If they do, you know, they run your MIB report, and MIB is your Medical Information Bureau. They run your, three things they have to run is your MIB. They also have to run your driving record, and then also your pharmacy or RX. And so they like to keep the option open because if they see something that's questionable or they want to know more information about it, they put possibly, right? And just in case you have to take an exam. And then the average days to get this particular policy in force is 22 days. So let's take a look at this really quickly, just so you can kind of see a little bit more of what you would see once you run a quote online. So this is 100% return of premium. How awesome is that? So it's telling you when your policy ends in 30 years, the additional premium for the return of premium benefit will be returned to you in a lump sum. If you cancel your policy early, you could get back a partial amount, just like I explained to you. So again, it goes over his weight and information here, and it's telling him what he can qualify for, okay? Since he is 220 pounds, yeah, no problem. He can definitely qualify for preferred, you know, the health class. Let's see here, but he cannot go over 237 pounds, okay? If he does that, he would not be able to get this rate. It may be a little bit higher. All right, conversion. So this policy is convertible to the age 65 and 2 years prior to the end of the level term to any non-medical permanent product. So what does that mean? Again, this is a term product, all right? Non-medical permanent product. Permanent is AKA whole life insurance. So they're saying that, you know, by age 65, you know, he would have to make a decision if he wants to convert this over to a non-medical permanent product. And if you do that, then he doesn't have to take an exam again because he has that clause in here that allows him to do that. If not, he can just continue to keep this particular policy in force, and then it will expire at age 73. Okay. Again, contact information is there. It says exam is possible, and that's based on your answers to underwriting questions. An exam may or may not be required. Okay. If we wanted to see how much this would cost annually, if we wanted to save that $44, Mr. Powers is very frugal. So he's like, you know what? Tell me what it would cost on an annual basis. Great. I'm just going to go ahead and, have them draft $1,020 from my banking account. So that'll be done for the year. Okay. And that's it. So that's kind of what that looks like there. And then let's look at the last one here. So now we're going into our whole life. And we have two categories for whole life insurance. The first one is going to be, we'll go into IUL, okay? And then final expense. So for this one, these are going to be for my people who are a little bit more savvy when it comes to finances. But we'll just still keep the $200,000 example, mode of payment annually. But I want to show you all the various modes of payments, okay? Most of my clients like monthly because they're able to pay that monthly premium every month. Then the second most popular one is annually. People like to get that out the way. But quarterly and semi-annually are also available. I really don't recommend them though, because a lot of people forget about them. So quarterly, of course, you would pay up 3 months at one time, and then the next time you receive another bill for 3 months, right? A lot of people don't like that because, it's like 3 premiums at one time instead of, budgeting. A lot of people have budgets where they can pay each month. And then again, semi-annually is paying 6 months. And then once those 6 months are done, you pay the other 6 months, okay? But yeah, it is available, but monthly and annually are the most popular choices. And payment duration is for life. We'll do, let's see, the lower amount of years you do, of course, the cheaper it is in this example. And we'll go into that a little bit more. I just really want you to be able to navigate at this time the website, okay? And then this one, you never want to be an MEC. Again, there's a lot of tax disadvantages that come with being an MEC. So what we're going to do here is go ahead and change that, okay? And we just say we want to receive cash value at age. So let me change that too. We'll just do nose off. All right, great. So we'll do nose off so we can keep it moving. And then we'll say 65, income start age at 65, income age ends at 90. So this is when I want to get paid my money. This is going to help me with retirement. Fantastic. Rerun the quote. How much is it going to cost me? Oops, I forgot to create a premium. So let's do that. We'll say, this may be too low, but we'll just say, oh, we said paying annually, so let's do monthly. Okay. And now we're getting our rates. I like that. Doesn't take any time at all. And so, yes, so now we have nationwide. And as you can see, you hear a lot of these carriers that Again, we only work with the best. So you're going to be familiar. A lot of these are household names. So for $150, I could get nationwide, IUL. They are A+ rated company. Here's an illustration that they actually provide for you. Let's take a look at that and see what that looks like. And then we have to download it. Uh-oh, I have my pop block always. Here we go. Okay, and let's try that again. All right, and it did not come across correctly here. So don't worry, I can always get that for you. So no problem there, okay? So it just didn't pop up correctly on the presentation today, but it looks fantastic, and we can go. I always like to review that with my clients in detail. For this particular product, an exam is required, all right, 38 days, and you're probably like, oh my gosh, it's over a month. Unfortunately, yes, since COVID, everything has just changed. It's been so crazy. So for certain products, they do, and for certain carriers, it can take longer to get approved. So definitely look at that when we're trying to decide on what's appropriate from your family. If you need something quicker, we can find other options for you. If you're okay with the 38-day wait in this particular scenario, we can always proceed with that, okay? Not going to go over a lot of this because, again, we've kind of already touched bases with that. I just want you to see what that looks like. But look at this, too. This is one thing I didn't tell you. So, for instance, when it pulled up nationwide, of course, it pulled up this one was the fastest, like the number of days, right? So it pulled up that first. But look at this. This is the one with the highest income. How much is going to give you back? And then here's another one for 150. So you have options, okay? Awesome, awesome, awesome. And then let's go to, I want to go back and then show you some other products here, okay? So look at all of this. These are all of your permanent products. So we did the protection IUL. They have guaranteed UL, and that's universal life, okay? And then whole life insurance, which a lot of people know about because this was on the scene first. And then accumulation IUL, and then final expense. We're waiting for them to, and actually final expense won't come up here because we selected $200,000. So usually final expense products goes up to $40,000, right? And that's just to cover your burial. But as you can see, this is very easy to use, very user-friendly. You just kind of select and go and just click next, okay? Oh, so what we're gonna do, let's just select, let's go back to term, okay? Make it easy for us here. And then we're going to do 30 years. So for $46. All right. We understand an exam is required. And let's look at this. But what if you don't want to take an exam? What if you're like, no, I just don't want to do an exam? Well, look at this. We have legal in general. Or banner, because they actually just merged. So no exam, okay? Again, SBLI, no exam. So you have a lot of options, okay? So let's just go with SBLI. We'll do that. And it's 25 days here. Let's continue. And then what we're going to do is, hey, we're going to go ahead and get rolling, all right? So let's just go ahead and put in some information. So we have power for life. And then we're just going to put, you know, example, okay, at gmail.com. And then we'll put in their phone number there, okay? And then it just kind of, again, gives you a summary of what you're applying for. So Mr. Power is applying for a level premium for 30 years, okay, at $48.89. Now, just to let you know, well, let me go ahead and put in my real email address here, because they're probably like, that's a fake email address, right? All right. The good thing, though, is, well, I shouldn't say the good thing, but it could be a good thing or a bad thing, right? But this $48.89 is just a quote, okay? We haven't pulled any medical information on Mr. Power. So we're just saying, hey, for a gentleman his age, who is his height and weight, it should be around this price, okay? For the state of Texas, it should be around this price, okay? But once they actually pull his medical information, they will either honor this or they will come back and say, well, actually, we'll have to rate you at a different rating, and maybe it's $52 instead, right, per month. But they will let us know before you have to agree to it, okay? So let's just do, we'll just make up something here. And then they always want to know your years at the address. They love longevity. So if you've been there for 10 years, it's fine. If you've been there for 10 months, you probably have to put at least 1 year, because they ask for years, right? But one thing about insurance companies is that they love longevity. It basically communicates to them that you will pay your premiums on time, right? They love people who are consistent. So if you stayed on your job for a while, if you stayed at your address for a while, if you go get regular health checkups every year, that looks very good on your health application, okay? Or your insurance application. Is he employed? Yes. We're going to say Mr. Powers is employed. We're going to say he works for ABC. We'll say ABC Painting. And we'll just say he's the CEO, like he's a painter, right? He has his own painting company. And we'll just say he's done that for 8 years. And we'll just use his address, okay? His home address as his office, okay? Will Mr. Power own this policy? Yes. So he will be the owner and the insured. It's very possible, okay, for him to be the insured and not the owner. Let's just say someone who has a vested interest in him. For instance, his wife wanted to own the policy because she would be making the payments, right? So she could be the owner and he would be the insured. But in this case, he's going to be the insured and he's also going to be paying his monthly premiums. Please specify who will receive the $200,000 death benefit. Well, of course, we want to give that to his wife here, okay? And her name is Amazing, okay? And that's for life, Amazing for life, all right? She is Mr. Powers' wife, okay? And we're going to give her 100%, but in the event you don't, you could always do 50% and then come back and add another individual. You could do 20%. You know, if you had 5 children you want to split into, as long as everything adds back up to 100%, you're okay. Okay. And then they want to know the social, well, that's optional, excuse me. Phone number is optional. Date of birth is also optional, but that street address has to be there. Okay. So that's okay because that's his wife. So they live at the same place. So we're going to keep that there. You can add additional optional contingent beneficiaries. So let's just say in the event something happened to her, who else would he prefer these funds to go to? Maybe his children, right? Maybe to his business because he has a painting business. Or if he has a trust, and trust will come with their own EIN number, then he can put that there as well. But at this time, you know, he's not going to add anyone, so he can skip. And it's not mandatory. And one other cool thing is that you can always update your beneficiary list once this goes into force, is placed in force. So for instance, a year from now, if you wanted to add your sister or someone else that, you know, is an approved beneficiary, you can always do that. Annual income. So we're going to say Mr. Powers makes $110,000, okay? And then this right here is assets. And I like to remind people this is just, it's not, it's not concrete, okay? It's just a guesstimate. So you don't have to give real concrete numbers here, all right? People are like, oh my God, I have to add up everything, come back. No. Just kind of, it's about how much you think everything is. So your assets, I would say, you know, he owns his house, which we said it was 300. He owes like 150, I believe. I can't remember the number I said. So we'll just say his total assets with his cars and vehicles and money in the bank comes to $180,000. Okay. And actually, we'll say 280 because I think that we said for him his liabilities. Okay. And then you have to put the social here. All right. And then you have to put the birth state, okay? Driver's license, yes. Put the driver's license number in. Texas. And bankruptcy, no. When you go to the next screen, which not going to do that because it's going to ask me for a valid social security number. But when you go to the next screen, it will ask for his employment information. How long has he been there, okay? How much does he make there? And so all that information would be there. Then lastly, it would ask for his banking information, okay? So you have two options. It's really good to put that banking information there, so that way once your application is approved, then they can go ahead and immediately withdraw those funds. If not, if you don't want to add it that day, or sometimes people don't have the exact numbers, to their account number, routing number, things of that nature, we can always skip that, okay? And then once you've been approved, then we will have to come back to make sure we get that information, so that way they can draft your account. And the option is to draft the account, especially when you're doing an online application, because they're using technology, right? We are getting away from the whole checks. Now, certain companies with certain products do require a check, especially if it's anything that includes dividends, things of that nature. Sometimes they may require a check, but usually even those particular products can always be done online, okay? So it just makes it more convenient for the insured. And then you just go ahead and they'll ask you, would you like to sign online now, or did you want them to email you the DocuSign application? It's so easy to just sign online, and then it'll pop up a DocuSign screen, okay? And you just press start, and then it'll drop down to each section where you need to sign. It will create a digital signature for you, and you just press click, 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 and finish. Once it does that, you'll see this beautiful confetti congratulating you that your information has been sent to the carrier. And so that's when I will follow back up with you. Once I get in touch with the carrier, we will keep in touch with you every step of the way. We have a great project management system. We will email you, we will text you. You will always know where we are in the process. So this is where we go, you guys. If you want to just take a look, maybe you've had some ideas on, man, it's time for me to get insurance for my family. I've got to do this. I've been procrastinating. Let me just take a look out there and see what the rates are. And you really don't need my help. If you are computer savvy, you can go ahead and book online and get the process going. But again, my contact information is up here, just in the event you would like to go over things together, or if you have questions before you press submit. All right. Well, thank you so much. This has been great. And I do appreciate you taking the time to listen to our website tutorial. Again, go to www.aimutual.com. Visit us on Facebook. We are here to serve you. We absolutely adore and love our clients, and can't wait for you to be a client and join our high society. Our high society, the HI stands for Happy Insured. So we'll definitely see you on board at our next high society function. Thank you.